Welcome back to a brand new YouTube video. Today I'm going to be showing you the best strategy you could possibly use in the market. So going into 2026, you're going to be strategy hopping, bouncing on different strategies. If you are looking for a consistent strategy that does work every single year and it will continue working forever, then this is going to be the strategy for you. 6 or 7 minutes. Okay, it was a really good trade. This finished my trading off for the year, and I will be back in about 2 weeks after Christmas and New Year's. But this trade was perfect to see out the year. Okay, and I'm going to break it down for you, show you exactly what you need to look for, and also when to enter the trade, when to close. Everything is going to be broken down in this video for you. If you've seen my videos before and you've been subscribed to my channel for a long time, then you are probably going to be familiar with this strategy. But again, all types of education regarding it are going to help you anyway. So let's get straight into it and break down this specific trade here. Okay, so the first thing we need to identify is obviously market open, which is 9:30 a.m. of course for New York time. And as I come into the markets, the first thing I'm looking for is areas of liquidity. Okay, now areas of liquidity is essentially where price is just holding up and there is stop losses above or stop losses below that we want to be targeting. Okay, the market moves by moving from liquidity pool to liquidity pool or filling in balances and then moving to a liquidity pool. So the first thing I do when I jump on the chart is go to the 15-minute time frame. Okay, and you're going to mark out all levels of liquidity. Okay, so that's just going to be your simple swing highs and swing lows in the market. Okay, so here I've marked out 2 levels of buy side liquidity and our level of sell side is here. Okay, so these are our 2 levels of liquidity above, and we've got this major level of sell side down here. Okay, so now you've got your draws on liquidity marked out. So this is where you would look, okay, for price to go into one of these levels and then reverse to the opposite level, or sweep a low in this kind of area and then look for continuation along higher. Okay, so if we jump back down to the 1 minute time frame, you will see that we came almost perfectly straight to this buy side liquidity, which I marked out earlier. Okay, so this big candle here is 9:30 open. And you can see we almost took out this level and missed it by a couple of ticks. Okay, and then you can see this liquidity pool down here. We have got relative equal lows, and we distinguish that by just looking at the chart and understanding that all of this price action here, okay, has not been swept out yet. Okay, so all of these wicks still haven't been swept, and we know that there is guaranteed stop losses down here. Okay, so we're going to be targeting this liquidity pool. Okay, so now we've got those levels marked out. Another really important liquidity level is actually the 9:30 open candle. Now this only applies if it leaves a swing high or a swing low. Okay, so here you can see that the 9:30 open candle is actually a wick inside of a fair value gap. Okay, it's a very small fair value gap, but if I zoom in, you can see that this wick is inside of this gap. Okay, which makes it a good draw on liquidity anyway. But not only that, it's the market open candle. Okay, and what will tend to happen, I'd say 90% of the time, is this market candle will get swept out at some point during that New York session. Okay, so you can see we've already taken the market open high and we've left the market open low. Not only that, but we've got this clear liquidity pool below as well, which I marked out earlier. Okay, so we know that we're going to be targeting this anyway. So now you've got all of your liquidity levels marked out. This is simply where you're just going to wait for one of your levels to be swept, okay, and then we're going to look for the entry criteria. Okay, so we'll play a couple more candles through. You'll see that eventually we do come up and we sweep out this buy side liquidity. Okay, so here this candle has just perfectly wicked this buy side level. Okay, so we've swept liquidity to the buy side and we've also taken out this level at the same time. Okay, so this is perfect. Now once we've taken out buy side, we're going to be looking for shorts, and if we take out sell side, we're going to be looking for longs. Okay, so it's always the opposite of where we've just swept. So now that we've taken buy side, we know we're going to be looking for short positions. Now, again, you can mark out your internal lows, maybe that you're looking at, so maybe this low or this low. These are going to be good partial points, or TP1, TP2, or whatever, depending on how you trade. But you can mark these out anyway, because you know that these are going to be a nice target for you if we do get an entry. Now you've got the first part of the framework marked out, so you've got your liquidity sweep, you know where you're going to be targeting. The next thing to look for now is fair value gaps. Now, the way we're going to use fair value gaps is actually by waiting for them to be inversed rather than respected. So, like I said before, if you've seen my videos before, you will know that this is the strategy that I use every single day. So I'm waiting for fair value gaps to be inversed, and I'm actually looking to take short positions from around this area to go lower, okay? Instead of what normally you get taught is to wait for a bounce, you know, and then a continuation higher. We are simply not doing that. We are going to use these as a bearish momentum, you know, confluence. So once this gets broken, that clearly tells us that bearish momentum is kicking in and we are showing signs of a reversal to these internal lows. Okay, so now that you've identified a bullish fair value gap and you have got your buy side liquidity sweep, and we've also swept out that major level to the left, the next thing we do is simply wait for this fair value gap to be broken with displacement. Now, what displacement is essentially large candles that show strong signs of momentum. So I will show you exactly what I mean very shortly. So you can see we come down, we wick in, and we get a little reaction out. Okay, so this is what a lot of people are going to be entering long positions from. So they're going to see this big rejection, okay, with this large wick. Their stops are going to go below here or below this level, and they're going to be targeting, you know, wherever, okay? They might be targeting this buy side up here, which is not a bad idea. But for me personally, I don't trade that way. So I'm waiting for this bullish gap to be broken with some good momentum. And you'll see that the next candle clearly breaks this bullish fair value gap with a lot of momentum. Okay, I'm sure we can all agree, or you should be able to agree, that this is a strong bearish candle. So what this tells me is that the buying power in this bullish fair value gap and the orders that have been filled are not enough to take us higher, and we've actually displaced through it with a lot of bearish momentum, which probably means we're going to look for some kind of sell side liquidity. Okay, because if we're not respecting bullish PD arrays, then it looks like we're going to go to sell side. And that's why it was important we marked out these two levels here. Okay, so now that we've got the inversion and we've got a strong close below, this is now where I would enter a short position. My stop loss would be back above the inversion, and we would simply target any of those sell side levels that we marked out. So our first target would be this initial low here, which is a 0.74 risk to reward, and our overall TP would be this market open wick, which I explained earlier is a really nice draw on liquidity. Now this trade was a 2.5 risk to reward, and you'll see as I play through, we come down, we smash our first TP. Okay, so this is where I would go break even. Now the reason I would go break even here is because we have just tapped into this big unmitigated bullish gap. Okay, now the reason we would go break even is because we do not know if this bullish cap is going to get broken and inverse just like this one, or if we're going to bounce out of it and continue higher and then end up coming up and taking buy side. Okay, so there is no point leaving our risk on the table up here when we could go break even and, you know, protect our risk. We've taken out that internal level, we are now completely risk free, and we're holding to this market open low. Okay, and as you can see, we come extremely close to break even, but we don't actually get tagged out. And we get another displacement leg back down. Okay, so this is perfect now. This is perfect. That's what you want to see, of course, when you're in a short position. We are now well over halfway to TP. Stops are at break even still. And at this point now, okay, you can see we have just made another bearish fair value gap. So at this point now in the trade, I would actually move my stop loss to above this first candle before the bearish fair value gap. Okay, so just slightly in profit. I'm not doing it too tight, okay, because sometimes prices are going to come up, wick into this gap and tag you out. Okay, that's not what you want to happen. You want to give it enough breathing room, but it still should respect bearish PD arrays. Okay, if you're in a trade and you're looking for shorts, you want every bearish PD array to be respected to give you confidence in the trade. Okay, because if price action comes up now and inverses this bearish gap, that's not very good for shorts, okay, because the selling momentum is clearly dying off and bearish fair value gaps are being inversed. So we don't want to see that, okay? So I simply move my stop slightly in profit to above this candle and let the rest run. For 65 handles, 0 drawdown, absolutely perfect trade. And that is literally an A setup of this model and the strategy that I use every single day. The Discord is linked in the description, so if you want to learn this strategy for free, you know, join the community with all of my other students and watch me live stream every single day trading this model, then the Discord is where you're going to find that. I've also got lots of free guides and lots of free education on my YouTube and also inside of my Discord. So yeah, thank you very much for watching. This is Christmas Eve, so I hope you all have a very good Christmas and a great new year. Let's smash 2026 off. Using this strategy, it's going to make you profitable. So come back to this video, make sure you like, subscribe to my channel, and I will see you all on the next video.